Hi everyone, it's Marissa and Faraz here from Rise High. Thanks for joining us today. If you're looking to buy a new home, maybe you want to upgrade, maybe it's time to move on, maybe you're even downsizing. If you're currently looking to move into a new home and you're looking at ways to do this, bridging finance might be something that you need to consider. So today I've got Faraz here, who's a bridging finance expert in our team, who's going to be talking all about bridging finance and what it is and everything about bridging finance. So we're coming to you live today. We're happy to take any questions and comments live as well, but we'll be going through some questions that we get frequently asked about bridging finance, and we hope that they help you to understand it more and make the right decision for you. So welcome, Faraz. Thanks for joining
Marissa.
me today.
Thank you.
So let's just start with the basics, Faraz.
Yep.
What is bridging finance? Let's just explain what it is to start with.
Yeah, so bridging finance is usually a short-term solution where you're looking at purchasing a property but maybe haven't got your finances lined up with another property that you're wanting to sell in the meantime.
Right, so it's kind of in a situation where you want to sell your current home,
Yep.
but you want to buy a new home before you sell
Correct.
your current home.
Exactly
And it
right.
helps to bridge the gap
To bridge
in between.
that gap.
And how does bridging finance actually work? Like, does the person have to pay the repayments on both loans, or how does bridging finance actually work in reality?
So it can work differently depending on which lenders that we do go through. So we can work it with usually the end debt, and then there are some other scenarios where we also need to be able to service the peak debt also.
So you've mentioned peak debt and end debt. Let's just explain that to our viewers as to what actually that means.
Yeah.
So when you refer to peak debt, what is peak debt?
So peak debt is the period where you're carrying both debts of the new home purchase and your existing home purchase, plus interest accrued, and that's usually over a 12-month period where the bank sort of
So
work
that
on
would
it.
be when your debt is at the highest
At the highest
level.
peak.
And what is end debt?
So the end debt's essentially the end position. So once you've sold your property, the remaining debt that's left over to service your home.
Okay, great. So just to get this right, so you buy a new home
Yep.
while you still own your existing one.
Correct.
Initially, your loan is peak debt, which is the loan for your existing home plus the loan for the new home plus any fees or expenses.
Correct.
And then once you sell your existing home, the debt reduces to what they call the end
The
debt.
end position.
Yeah, okay, great. So when should somebody consider using bridging finance as an option?
So bridging finance would be an option if you found the property that you love, you haven't had a chance to get your ducks in order to be able to sell your property, but at the same time you don't want to miss out on this property, so you still want to purchase the property and you just need that period to bridge the gap.
And I think it's important to point out that there's lots of options when it comes to finance to help you transition from property to A to property B. You could consider maybe keeping your existing property as an investment property.
Correct.
You could consider, there are other ways to do it apart from bridging finance.
Yes.
But what's the thing that would really drive someone to choose bridging finance over all other options?
So you might not have the serviceability to service both loans at the same time, but you've got really strong equity, your remaining debt's really low on your current property, and you can service that end debt.
So would this suit somebody that isn't confident making the loan repayments on both properties? How does that work? Like, will they actually have to repay loan A and repay loan B at the same time? What if they can't afford that from a cash flow perspective?
Yeah, so that's where I guess different lenders have different rules. So some lenders need to be able to, in the meantime, service both loans or have savings in the account. And then we've got other lenders on our panel that, we just look at your end position, we'll capitalise the interest in between that so we can service it that way for you.
So when you say servicing and capitalising the interest, just explain what that means in simple language.
So capitalising the interest, because usually during the bridging period you don't need to make any repayments on the loans, so the interest just essentially accumulates to that peak debt. And then servicing is where the banks look at what your income versus expenses and liabilities are and look at can this be serviceable?
So just to confirm that, you can actually go down the path of a bridging loan. You don't have to pay the repayments on the peak debt. You're only making the repayments based on the end debt.
On the end debt, correct.
So it kind of gives you that flexibility of taking the time to sell your house, getting yourself organised before you transition to that end position.
Correct. You don't have to be in the rush to sell your property. Usually they do give you a 12-month period to sell. So that's where you can sort of engage with a real estate agent on when's the best time to sell, when there might be a shortage of houses on the market, so you might get a better price then.
And it might give you some time to make some improvements or do some work to the property to get a better price.
To get top dollar.
And especially, in a market like we're experiencing at the moment where prices are rising, every month it seems, holding on to it for a bit longer might actually benefit you down the track. So how does someone actually access a bridging loan?
So to access a bridging loan, conventionally most banks have pulled out of this space, and it is an option where brokers can still have it. So contact your broker, and the broker,
Rise High broker,
Rise High broker, of course, and we'll be able to sort of have a sit down to look at what your goals and dreams are, and then find a solution for you, whether it's servicing on the end debt or looking at both options for you on the peak as well.
Yeah. And if someone comes to you looking for a bridging finance, are you also exploring all the other possibilities for them before you?
Correct.
Or just exploring the bridging finance? What's the process you normally go through?
So look, ideally we want to stay out of the bridging process because usually it is a little bit more expensive in terms of the rate. So we'll look at different sort of solutions, what can sort of work for you, whether it's achievable, maybe you haven't thought about it, but you can keep your existing home as an investment to build your portfolio that way, or we can also look at different options available to you.
Yeah, so it's great to know that you can explore all the different options. Now what I want to do is drill into some of the pros and cons of bridging finance, just so people can get a little bit more understanding of some of the benefits and some of the, the cons that we need to consider. So what are some of the positives of considering bridging finance over other options?
Yeah, so using bridging finance, the pros are you get to avoid the selling stress. So on trying to rush and sell your property, you can buy the property that you want straight away. You can avoid renting in the meantime as well, and also you can just move fast to get that property off the market before other people snap it up.
And I think in the current market, some of those positives are really important, because in the current market it is difficult for buyers to find the right property. So if they've sold their house, then with the intention to start looking for another property, and then they take a long time to find the right one, or it can leave them in a bit of a pickle.
Yeah.
So this way you're able to find the right property first, then sell your house after. It sort of means that you're guaranteed to have a home to move into once your house is sold.
Correct.
So that's a really big plus,
Big
especially
plus.
in the current market where buying the right thing actually isn't very easy because there's not a lot of stock on the market.
With limited stock.
Whereas selling your house is probably going to be pretty easy in the current market.
Doesn't take long at the moment.
Yeah, of course the market changes from time to time, but right now, it's definitely easier to sell than to buy. What are some of the downsides of bridging finance that people need to be aware of?
Yep. So I touched on it before, but usually does attract a higher interest rate. So interest rate could be sitting during that bridging period about 8-9% in the current market. You do also need to have a clear exit strategy on it. Now, in terms of like exit strategy, is whether there's going to be an end debt and servicing that end debt, or if there's not going to be an end debt. And also you do have a higher risk as well in case your home doesn't sell for the anticipated price. That end debt position may be higher than what you expected it to be.
Yep. Okay. So that's a few of the pros and cons. What are some alternative options to bridging finance that people should also consider?
Yep. So if you're not looking at using your existing property as an investment property, you can also look at purchasing a property, having an extended settlement period on it to give you time then to put your house on the market and sell that, and then having that extended settlement period, you can then bring settlement forward to match up on the same day that way.
So what you're saying there is that the property that you want to buy, negotiate a really long settlement so that you have time to sell your house in between.
Correct.
And that's a great strategy, but in the current market, it's really difficult for it makes your offer a little bit less attractive.
Yes, it does.
So you probably have to offer a premium price for the property you're buying to get that accepted.
Yeah, and also it's probably worthwhile working with the agent as well that's you're purchasing the home from, that they can maybe sell your property as well, so they've got oversight on both properties and can see things lining up as well.
Yeah. What are some of the other alternative options that people could consider?
Other options you've got is you can explore rent back arrangements with the seller of the new property, and also if you've got equity, consider maybe an equity release product to get the finance done up front.
Okay, great. So there are lots of other options. There's lots of things to consider. So if someone is looking to upgrade their family home or move to a new home, you know, what's the best thing that you can recommend to them to do? Would it be to come and see someone here, or what's the best thing that they can do to prepare for that stage of their life?
I would say first process would be come see us here at Rise High, have a chat to one of our brokers on just some options that are available to you, so you can see I've got option A, B or C, and then see what works best for you.
Absolutely. Well, that is pretty much it for today. It's a bit of our snapshot of Bridging Finance. Of course, we're available to answer any of your questions, and we want to always make sure that your best interests are put first. So thanks for joining us today, Faraz.
Thanks, Marissa.
And if you have any more questions about bridging finance or upgrading or downsizing or anything you want to know about money, finance or property, that's what we're here for. So please reach out to the wonderful team at Rise High, and we'd be happy to help you with our fee-free service. Thanks and have a great day.
Thanks, guys.
Bye-bye.
Bye.